My name's Victoria and I'm one of the financial consultants at Property Tribes Financial Services. I wanted to jump on and talk about remortgages. One of the common questions I'm getting asked by the landlord community is whether they should go for a 2-year or a 5-year fixed rate, or whether to go for a tracker rate. Everybody's circumstances are different, and in all honesty, it depends on what your plans are for the property portfolio, what your plans are for the property, what the rent looks like, lots of different things. So there isn't a straight, easy answer to that question. To clarify, 2 and 5 year fixed, as you know, you are paying the same payment each month, whether the interest rates go up or down, that stays the same throughout that period. For tracker rates, don't get confused between a tracker and a discount. The tracker tracks the Bank of England base rate. So if the base rate comes down, your monthly payment will normally come down the following month, and the bank will write to you to advise of this. A discounted rate is discounted off the lender's standard variable. And the difference with this means that when the Bank of England reduces the rate or increases the rate, hopefully reduces, the standard variable rate for the lender doesn't have to change. So just because you're on a variable rate doesn't necessarily mean that that lender's rate will go down if the base rate goes down. So just make sure, if you are looking at trackers or discounted rates, you know the difference between a tracker and a discount, because you don't want to get caught out thinking you're going to get a reduction and actually you aren't. Things to consider. First of all, the rental income that you're getting in. Does it meet the lender's affordability? 5-year fixed rates are normally stressed much better than 2-year or trackers. So you actually might have to go for a 5-year fixed if the rent is tight. So that's just something to think about. Secondly, if the rental income doesn't meet the lender's affordability, we can look to do a product transfer with the lender if they offer them. That means that we just transfer the rate from the current rate to a new one with the same lender. The benefits of this are there's no legal costs, there's no surveys, but some other things to think about is if you've changed the type of tenant that you've had in the property since you took out that mortgage. So as an example, you've gone from a professional tenant to a student or somebody that's claiming benefit. We must know, because that could affect the type of lender that we go to, as not all lenders accept these kinds of tenancies. So they're just some things to consider. The other thing we can consider if the rent doesn't quite meet the lender's stress testing is looking for lenders that can accept market rent. So that means that the surveyor will come out and do a valuation on the property, and they'll not only give us a valuation on the property, but also on the rental income. And some lenders will accept the valuer's rent versus what you're currently receiving. So that's another option. Something else we can do is look at lenders that can consider income. So if you have another income coming in that through self-employed or through employment, we could potentially do something called top slicing, which is where the lender will take that income into consideration to help bump up the affordability. Finally, a full portfolio review. So looking at other properties that you may have in the portfolio that we could do some additional borrowing on to then pay down that existing mortgage that could then fit the lender's stress testing. So there's lots of different options if the affordability isn't quite there, as opposed to just sitting on the standard variable. So certainly things to consider. If you've had a change in circumstances such as your credit history, so late mortgage payments, missed payments, it's always good to supply a credit report. So that's something that can be discussed with the lenders up front before you start paying out for survey fees and any kind of application fees. We can make sure this is discussed up front, and it saves you money in the long run, because we know the lenders that will accept missed mortgage payments, arrears, utility issues, versus just trying to put the application in with a lender that's going to decline it at underwriting. When I'm presenting you with options, I do something called a true cost calculation. So I'm not driven by the rate. There is a lender out there currently that's offering a 2.74% fixed rate, which sounds absolutely fabulous. However, you have to pay a 9.9% arrangement fee, in order to secure that rate. So what I'm looking at is the total monthly costs of the interest rate, and then I'm looking at the arrangement fees that are included in that, any survey fees, legal fees, if you get any cashback, any application fees, and that will give me the true cost over the 2 or 5 year period. And I will be able to then show you which is the best value for your current circumstances and the lenders that you would qualify for. So it's certainly not driven by rate, it's driven by what's going to be the most cost effective option for you. There are some crazy fees out there. As I said previously, we have a lender that's offering a 9.9% arrangement fee. And for some people that works, but for the majority, adding that kind of figure to your overall mortgage balance, the consequences are, one, you have to pay interest over that on that over the term. But the second thing is, by adding such a huge amount of money onto your mortgage, if you don't have the capital growth on the property, first of all, it could limit you to how much money you could pull out of it in the future. But secondly, if you don't have a lot of capital growth, it could push you over the 75% loan to value threshold, which then could have issues when you come to remortgage in the future. So certainly, if you're going to your bank or going to other brokers, make sure that you're double checking exactly what fees are due on that, because whilst you don't necessarily have to pay the arrangement fee up front, adding potentially 7, 6, 5% of the mortgage balance onto your current mortgage is a lot of money. If you're thinking of selling the property, certainly something to consider could be a 1 year fixed rate. There are lenders out there that do offer this, and also tracker rates where there's no early redemption payments applicable. So this means you could then come out of that mortgage at any time and there would be no cost in order to come out of that. Again, things to consider are any fees involved, any kind of valuation fees, legal fees. But if you are looking to sell, don't just assume that you have to sit on the standard variable. There could be options which could save you each month while you're looking to make that decision. So in answer to the question of should you go for a 2 year, a 5 year, or some kind of variable rate, it all depends on your plans for the portfolio and your own circumstances. But the biggest thing is reach out to us, have a chat. Let's do a portfolio review with you. Let's talk about your future plans for the portfolio, your own circumstances, and find the most cost-effective options for your mortgage. For those of you coming off of a 5 year fixed rate and you're going to be experiencing the increase in interest rate and the increase in monthly payment, please reach out to us. Don't be worried. We can talk through what this could look like. If your mortgage is coming up for renewal in the next 6 months, most mortgage offers last 6 months. So lock in something now. There's no guarantees that rates are going to be decreasing over the next 6 months. If rates do come down and the lender allows us to change interest rate, we will move you down to that lower interest rate so you benefit from that. But at least if you've locked in now and the rates do increase, you don't have to worry, you've got the best rate for this time, for the snapshot of time. So give us a call at Property Tribes Financial Services. We'll put the number below and let's have a chat about your portfolio.